Hello and welcome to Livewire Markets reporting season coverage. Today I'm having a conversation with James Gerrish, who is the Portfolio Manager for Market Matters and Market Partners. James, great to see you. Thanks for sitting down and having a chat.
Great to be here, Chris.
Just to provide some context for the audience, it's been a big week for reporting season. More than 70 companies reporting, some of the big names, BHP, Rio, Wesfarmers, Telstra and Goodman Group. ASX 200 hit fresh all-time highs during the week, and it follows what was a pretty ordinary week for reporting season last week, James. So just to take the overview, how have you found this week?
Yeah, a huge busy week on the desk for us, obviously reviewing a lot of these results that are coming through. You made mention of some of the big caps. Obviously, some of the big index influencers have been reporting good numbers. The miners have reported strong numbers. BHP was particularly good. Telstra yesterday was really interesting. So they're going reasonably well. Stock price reacted favourably to that result. Overall, it's sort of, probably more positive overall out of this last week's reporting period. So I think it sets it up well. There's still a few headwinds from a consumer point of view. There's still, some cost challenges out there. But overall, I'd describe it as a pretty solid reporting season so far. The share price reactions have been big. So there's been, this continued, bidding up of those companies that report well, the same old story that's played out, but also the pretty aggressive selling of any companies that underwhelm the market has been the key here. But overall, good week from a reporting standpoint, Chris.
Let's dive into some of the results, James. We'll start with BlueScope. It was fairly volatile on the day of release. The results were broadly in line. What did you make of the results? And I guess, does it even matter now with the revised takeover offer that we've seen later in the week?
Well, the companies, they're performing, right? So the big change in this result was a big uptick in the dividend. You made mention of the takeover approach that's been going for, there's been a couple of attempts on BlueScope now. It's probably, they've come out and suggested last and final bid price unless someone else enters the fray. So that's what's probably driving the share price at the moment. It's trading at about a 10% discount to the prevailing bid price. The board is putting a bit of pressure on the bidders by returning capital and also cutting a lot of costs out of the business. So operationally, they're performing really well. And if you're under takeover, that's what you want to be doing. You want to be coming from a position of strength. And BlueScope, for mine, is coming from a position of strength. And it'll be interesting to see how it plays out.
James, let's talk JB Hi-Fi. This one was supposed to die into COVID. It was supposed to die coming out of COVID, cycling off, those extreme comps. It was up 7% on the day of results. Results looked okay to me. What did you make of it?
Results were good in the context of where the share price is trading at. So there was a lot of, concern because of strong comps going into this result. They had earnings up circa 7%, which was probably better than feared. So this is a stock that's down about 30% from when they reported FY25 numbers. It's down circa 14% this year alone. So it's been weak in terms of share price. So some of these concerns around those comps probably have been allayed. So I actually thought it was a really good result relative to where the share price is trading. So we've turned more positive on JB Hi-Fi after this week's update, even though sales for the start of this calendar year are probably tracking a little bit lower. I think it's still a good result in the context of the share price. So JB Hi-Fi, we like that one.
Let's pivot to Seek. It opened a bit stronger on the daily results, but faded pretty badly. And we all know the story. It's been smashed over the last 6 to 9 months. In September last year, it's almost halved. So how did you see the results, and what do you think about the company moving forward, I guess?
Yeah, I thought it was a good result. So, they're delivering where they need to be delivering. They're controlling what they need to control. So, earnings were solid, but the AI narrative is still really impacting Seek. And I think there's some validity in that. Obviously, there's a lot of uncertainty around how AI will play out in the business models that it will impact. And I think Seek is probably one of those models that there's a fair chance that it will be impacted by what we're seeing in the AI space. So For us, a good result. They're doing what they can do, but I think there's still too much uncertainty around how the AI evolution takes hold. They're doing a good job in rolling out AI features within their platform, and they're getting good results from it. For us, I'd like to see more evidence that it's actually having a more sustained benefit, and they're keeping ahead of the curve. So for us, I mean, it's an okay result, good result, but there's too many uncertainties at the moment for Seek.
James, another company that's leaned heavily into AI is Goodman Group, of course, building the data centers. Results yesterday, I believe it was, seemed to top expectations, but the stock fell anyway. Any insights there?
Yeah, I thought that the headline number was a good result from Goodman. So I think that it was slightly above expectations. It was driven primarily by development earnings, and you're right. The stock pulled back I think it was on some disappointment around we didn't hear updates on some of these data center leasing and agreements that perhaps we thought we would get at this update. So that to me probably sold off too far for what the result suggested. They reconfirmed earnings guidance growing at 9% this year. Goodman has traditionally been this stock that under promise in terms of earnings and then upgrade as the year progresses. We haven't seen those upgrades come through for the last couple of years. So probably perhaps a little bit of disappointment there. But you think about this business growing at circa 10%, trading on 23 times now. This is a good result, and the share price around $30, I think, is still a buy at these levels.
James, you talked about Telstra in the opening and said it was interesting. I couldn't agree more. It was up 4% on results yesterday. We normally don't see this sort of excitement from Telstra. It's trading at levels we haven't seen since 2017. So, what did you make from it?
Well, there's something to say about predictability in this market. We've got this wave of uncertainty around some pockets of the ASX and global markets more broadly, but Telstra delivered where they needed to deliver yesterday. So it's all driven by growth in their mobile business. That's performing particularly strong. So if you think about Telstra moving forward, this is a business going to grow at mid-single digits. It's paying a really attractive dividend. I can understand why the stock popped up yesterday. I think from my point of view at 520 or thereabouts where it was trading yesterday, I think that's getting on the rich side. There's a lot of this positive outlook already priced into Telstra stock at the moment. But I can understand why investors are gravitating towards that certainty in that business. They're also doing doing a good job on the cost side. So some of the benefits of increased pricing has dropped down more than we expected they would. So hard to fault the result. They're doing a really good job. Mobile, as I said, is the driver of it, as well as cost out, which is continuing to perform well.
James, another one that investors usually buy for the certainty rather than the excitement is Transurban. Sold off a couple of percent yesterday. It's recouped all of that yesterday. What did you make of it?
Yeah, I thought the result was all in line. They reconfirmed their distribution guidance. So I think yesterday's price reaction was probably more on macro driven. We had employment data out, which was slightly stronger than expected. So we saw bond yields tick higher on the firming expectation around interest rate rises. So obviously, Transurban's seen as a bond-like equity. So it's very influenced by the outlook and prevailing yields in terms of the bond market. So to me, it was more of a macro-driven sell-off than anything operationally at Transurban. It has been on the weaker side. So and a lot of these toll road companies have been on the weaker side. So we don't own this stock, but it's one of those defensive areas that if we get market pricing is suggesting one, maybe two more interest rate increases this year. I tend to think that's probably as bad as it's going to get. So we could well be done in terms of interest rate rises in 2026. We might be one and done here in this cycle. And if that's the case, then Transurban will benefit from market's aggressive pricing of rate increases that don't materialise. So for me, it's probably more on a buy at these levels, given the share price has been weak leading into this result, good result, and delivered what it needed to.
James, let's round out with QBE. It, of course, reported this morning, so it doesn't get any fresher than this. Up 6% when I last checked. It looks like the net profit was ahead of expectations. Key takeaways for you on QBE?
Yeah, this is a stock we own that's reported well this morning. Again, it's been under pressure in the last couple of months leading into this result. So the market was a little bit concerned what they were going to deliver. I think a couple of key points. So we've seen Suncorp and IAG report softer numbers when they've reported, but they're more focused on the domestic motor and housing insurance. QBE generates a lot more of their earnings from overseas. Their investment portfolio performed really well, and that helped drove the beat. You've got these ROE came in just shy of 20%, which is really strong, above the 15% guidance that they generally target. And it's a business that's gone through simplification over the past year or two, particularly in the North American business. So they're less exposed to large catastrophe events over there, and they're more narrow in the way they're approaching their business, simplification of the business. And at the moment it's working. So this was a really strong result from QBE this morning. And the stock should be up 6%. It should probably be up more than 6% in our view.
Probably will cop a few upgrades, so you might get a bit of more juice on Monday. James, you talked about some of the major themes and the through lines in the intro, so I just wanted to get your perspective on the outlooks. Always really important to pay attention to outlook statements. Just generally, what are you getting a sense of? Is it more positive than negative? And what are some of the risks and opportunities that are being discussed?
Yeah, it has been. It's cautiously optimistic. I mean, one of the things I'd probably highlight is a bit of in the consumer-facing stocks. So there's been some mixed outcomes there. So we had Nick Scali report the prior week. They reported good first half numbers, but their sales update for the first part of this year was a little bit soft. We probably saw the same thing play out in JB Hi-Fi to a lesser degree. And Wesfarmers yesterday, we saw some weakness in Bunnings and Kmart out of their update. So I think the consumers still, we're sitting here and we've had one rate increase. I think that's knocked consumer sentiment a little bit, and we're starting to see that flow through into some of these early signs around how 26 trading is going. So the consumer is okay, but there's some headwinds on the horizon for the consumer. In terms of generally other outlooks have been cautiously optimistic, I'd say. And one of the other trends that I think is playing out in this reporting season, it has done in the last few, it's just the companies, ongoing buying. You said QBE will probably get some upgrades from today's result, and that's probably the case. And it will probably continue to rise past the result. So that's been a trend. Those stocks that have been missed, it's not just one day down and we're done and dusted there. It's typically, that continues over the coming days. So a good result, you probably hold a good result to see that continue to flow out over the preceding few days. And also it's been probably a good thing to cut positions that have missed the mark pretty early and be aggressive on that. So overall, I'm pretty positive on the reporting front so far. Markets trading yesterday. We made a new all-time high yesterday intraday. It's really underpinned by these big index constituents that have been performing well. The banks have been, I guess, something I'd call out in this reporting season where they've delivered, 5 to 10% ahead of expectations in terms of three have done first quarter trading updates, CBA's done their half year, and all of them were better than what we expected them to be. So the large parts of the ASX market are performing pretty well, not fantastic, but pretty well. And that's what's seeing the market go to all-time highs again.
James, last one. Anything that you're particularly focused on or looking forward to next week? What's a big company that's reporting for you?
I was just looking through the companies that in our portfolios that are reporting next week, and there's some really good cross section of companies. So we've got in the technology space, obviously WiseTech is out with their result. That'll be really interesting. That's been a stock that's been incredibly weak and a poor performer over the past 6 months or so. Another one that fits into that category, and we'll get a good handle on that, is SiteMinder. This is one of the stocks that the market has loved for quite a while, but this is an area that will be really interested to see how they're approaching the AI thematic at the moment. We had Hansen out last week, a smaller company that we own, who I thought did did a really good job of articulating their AI strategy, and that stock was bid up really well as a consequence of that. Fortescue's out, so obviously in the mining space. Light and Wonder, I'm really interested to see that. That stock has had some really positive news. It saw the share price rally hard, then it's pulled back in the last couple of weeks. And then in the property space, Centuria Capital, that'll be interesting in the property space. Worley in the engineering infrastructure area of the market. A lot of their competitors have been winning a lot of projects and been performing really well in terms of share price. Worley has been winning projects, but their share price has been it hasn't been doing a lot. It's been treading water for the past 6 months or so. So I'll be really interested to see the outlook on Worley's margins, so whether they're getting those increased margins that they've been targeting for quite a while. And then Woolies would be one I'd highlight also in the consumer staples space. So overall, we get a really good cross-section of companies coming out next week. And we'll get a good handle on how the overall economic picture in Australia is and what companies are doing for this, this big, large, uncertain impact from AI that's impacting pretty much all areas of the Australian economy.
Big week, no doubt, James, and then you'll get a rest after that, mates. Thank you so much for having a chat. Appreciate the insights as always.
Thanks for having me, Chris.
If you enjoyed that conversation, make sure to give it a like and don't forget to follow our YouTube channel. We're adding lots of great content every single week.